Today is May 1, 2:16 p.m. We detected unusual option activity on AMD Advanced Micro Devices, and AMD will report earnings tomorrow afternoon, as you see here, May 2nd. And so in this video, we will go over the unusual options that we detected today and then analyze them to see what the large institutions are doing. And then, number 3, we're going to go over our earnings trade based on the results of this unusual option activity. So, without further ado, let's get right to it. Here you'll see just at 1:55, this is just about 20 minutes ago, right? 2,300 of these June 75 strike puts, and then also at 12:57 June 16s 100 strike puts. So these June 16s, let's take a look at these puts. This one's at 2,000, this is 2,300. So June 16, here we are. You see here the 75 strike puts are here, and then the 100 strike puts are also here. The volume is over here, less than the open interest. This volume is also less than the open interest. So these could be closing orders, but we'll have to continue to monitor the data tomorrow before earnings is announced to have a better idea of what kind of trade these large trades were. And so let's take a look at another one. The May 5s, the ones that are expiring the closest to earnings over here, this 95 strike here, where you see done at 12:05. This one was quite unusual because as well as the May 5 110 calls here as well, this was a different time, 9:45, because when we look at the May 5s, you'll see here that there was 15,000 of them at the 95 strikes. So we know these are opening orders. We also have 16,000 of them also, all greater than the open interest at the 100 strike. So these are also opening orders. So this trade looks like a vertical call spread, a bullish call spread. And so that's something to keep in mind. And then because of this bullishness at the 95 strike to 100, we added a bullish leg to our trade. However, we also have a separate bearish trade as well. So because we're seeing some of these puts, they could be bearish. And so we'll find out more on whether or not they were bullish tomorrow, because over the weekend we were also monitoring this. We didn't make a video, but we also saw on the January 2025s these 70 strikes puts were also executed over the weekend. You'll see here 26,000 on the open interest. There's a majority of this was done over the weekend. And so this is something of concern. So we have, for our trade, we have a trade in which we have bearishness and bullishness. So this is what we did. For the May 5s expiring, we sold the 80 strike calls. As you see, our position is here, over here. And then we bought the May 19 80 strike calls, as you see here. So what that does is it creates a calendar spread, as you see here. And so this is the part of our trade. And so for our bullish trade, what we did for that was we went out and we bought that 95 strike that we were talking about earlier, the significance of the 95 strike calls today that we saw. And then what we did was we sold on the near term with higher volatility. We sold the 95 strike calls here. And so that is also a calendar spread. And so you end up with a double diagonal trade. This is, where there's two calendars put together, one bearish, one bullish. However, currently, one of our bearish trade is actually at a ratio of 2, and the bullish one is at 1. And so we may change this tomorrow as we see more data coming in to lean more towards one or the other. And so make sure you are subscribed and you have the bell icon click to be notified whenever we have updated anything new on this trade right before earnings tomorrow. But this is where we are currently trading at. The reason why we like this trade is because of the break even. As you see here at expiration, it is at 100.9, basically 101. So the stock has to break 101 to be a loss. And on the downside over here, it has to break $73 a share for it to be a loss. If it can trade in this range, it should be close to profitable. I say that because it also depends on volatility, because the volatility will also change after earnings. And as you see here, because volatility will change, it does affect these trades a lot. However, because the FOMC meeting is coming up on Wednesday, the day after the earnings, we don't think volatility will be affected, will change so much, because this trade does have a higher Vega, you'll see here. But we don't think the Vega will change as much until the Fed meeting happens. And so we are taking advantage of the situation with a high theta, try to bring our break-even points as wide as possible. And after earnings, we could take this off and not go into the Fed meeting with the volatility contraction after that. So 101, that break-even is up to here. You'll see here, close to here where AMD had traded on its high for this year. So as long as it doesn't break this right after earnings, this trade should be profitable. And as long as it does not drop below $73, which is way down here, right? Way down here, 73 is something around here, then it would be profitable. So this has a very wide trading range that it could fall within after earnings. And so this is why we are trading it at this time. However, as I mentioned earlier, we may change the direction and modify this trade. It is very easy to modify. And so make sure you are subscribed and you have that a bell icon click to be notified, because this is reporting after hours tomorrow. Okay, please smash that like button, and good luck on AMD. Take care, everybody.